What's going on, guys? Jason, Option Spartan here. We want to start our series of what is options trading and how to become an options trader. This will give you some insight on what we do as options traders and show you how we can be much more profitable than just a basic stock trader. So what we've got here is NVIDIA. I'm going to give you a basic overview on options trading. In our private group, I'm going to do another video and go a lot more in depth with all these. So if you want to join, links down below in our in the description for our website. We offer a 7-day free trial, and then we have two different versions. We have our silver package, which is just our alerts, or our premium, or the platinum, which will give you access to everything we offer, including these in-depth trading videos. But this is NVIDIA. Basically, stock trading, as everybody knows, you buy a stock, and when it goes up, you sell. If it goes down, as long as you don't sell, you're not going to lose money. This is NVIDIA. If you buy somewhere down here, the 138, 139 range, you come up here to 153.74, you're going to make money. If you miss it and it drops down, you just hold it, and I'm sure NVIDIA will come back up and retest this 153. So with options are different than stocks. The return on investment, or the ROI on an option, is much better than a stock and a lot quicker. Most of our trades with options are anywhere from a few minutes to a day. Some of our swing trades do last a week or two, but that's really about it. Some traders will go 6 months, 9 months, but most of our stuff is a day or a week or two at most. So if you miss this sale as a stock trader on NVIDIA, you might be holding it 6 months, a year, 2 years, who knows. But you buy it around this 139 range, you sell it at 153, you made about 14 bucks. With options, if we buy an options call here, depending on which call we buy, or contract, we buy it here, sell here, we could make a couple $100 in a day or so. Basically, you got two forms of options. You've got a call and a put. An option is the right to sell, buy or sell 100 shares of a given stock before a certain date at a given price. So you have two. You have a call, which you're wanting it to go up, and you have a put, you're wanting it to go down. In this instance, if we bought here, we would buy a call option. If it was trading at 139.13, we could buy the 140, 141, 142, etc. Call, and we would at that point have the right to buy 100 shares of NVIDIA at that given price. So if we bought the 140 call, we were up here at 153, we could essentially buy 100 shares of NVIDIA that's valued at $153 a share at $140 a share. So you can do the math, and it's profitable. But what we're doing, we're buying and selling the contract, which is the right to buy. We don't exercise a contract and actually buy the options, but we are buying and selling those contracts. So we buy this 139. We're at 139. We buy the 140 call. Just hypothetically speaking, let's say it's 150 bucks. So once we come here and we get into $145 range at the end of the day, from here to here, let's say that contract we bought was $150. It might be $350 now value. So at $350, we sell that contract. We just made $200 per contract. Another nice thing with options is the put side. So let's say we're up here. This yellow line indicates, for me on my charts, all-time highs. So let's say we're at all-time high, we're going to drop. If you've seen our NVIDIA video that we posted where we made 245% in a day, this is why. We seen that NVIDIA was at that all-time high. We bought a put contract, meaning we wanted to go down. We bought a put contract, and on this drop here, we made a couple $100 relatively quickly at open. You could go back and look at that video, and we talk about that trade a little bit more in depth. But the nice thing with options is we can make money as the market goes up, and we could also make money as the market goes down. Now, a few other things to keep in mind about options contracts and options trading is, A, they have an expiration date. So if you bet NVIDIA is going to go up to 140 and you get this kind of movement and you need it to go up and it goes down, you have an expiration date. Most of your contracts expire on the next Friday. As I was talking about earlier in the video, you could buy contracts further out, a couple weeks, couple months, whatever. But once it hits that expiration date, if NVIDIA, you need it to go up and it went down, your contract is going to expire worthless, meaning it will be of no value. So if the stock doesn't move the way you need it to in the time frame that you need, you can lose 100% of your investment. That's different with stocks. The only way you're going to lose money is, like we said, if you sell when it goes down. Options are completely different. Last, you have things called the Greeks. I'll do another video and I'll get a little bit in depth on the Greeks, but the Greeks are basically how the stock and options price correlate with each other. You've got the time decay, and you've got the delta, the rate of return, stuff like that you got to worry about. What we do, most of our options trading that we do, like I mentioned earlier in the video, is fairly quickly, anywhere from a couple minutes, 30 minutes, hour. 90% of our stuff we're selling same day. So the Greeks don't really apply to us being day traders as much as swing traders. But that's something to keep in mind, and something that, like I said, we'll go over and touch base with in a later episode of our trading videos. But once again, if you want in-depth analysis on these, your best bet would be to sign up for our private group. Like I mentioned, we offer a 7-day free trial, and there you will find more in-depth videos covering all this information, and plus you'll have access to me and our other traders that you can ask any questions 24/7. So if you like this video, make sure you subscribe, you comment, give us a thumbs up, all the social media stuff, and I appreciate you joining in. Thank you.